viewers, I am Sanjeev Pandya, welcoming you to this week's episode of the Tax Talk with AJ, right here on ITV Gold. This weekly show brings you all the latest and the greatest and all the updates that you really need to know when it comes to taxes, corporate taxes, personal taxes, and any and all taxes related matter. Before I go any further, I just want to let you know the show is sponsored by Science CPA Services, a full-fledged, complete professional accounting firm located in state of New Jersey, multiple locations. But wherever you are in the USA, you can contact them at 908-888-8900 or visit their website, sciencecpaservices.com, to have your taxes done right. That's what Science CPA Services believes, to have clients' taxes done right, and that's why they have a very large number of satisfied clients who continuously get their tax advice and tax returns filed. So Science CPA Services should be your point of contact for all your taxes matter. If you're in a business and if you're just a single owner of the business and you need virtual CEO, CFO, or payroll services or any other business related matters, virtually Science CPA Services can help you in that area also, so that way you can focus on a business. So for all that thing, Science CPA Services. With that note, I'd like to welcome Mr. Ajay Kumar of Science CPA Services with over 25 years of experience, CPA, CVA, and MBA. He comes every week, he joins us every week to share his knowledge with us right here in the Tax Talk with AJ. AJ, good to have you. Welcome to the show.
Thank you, Sanjeevji, and thank you for the kind introduction.
You're very welcome because, one thing I want to add in my introduction is that Science CPA Services, of course, they have very knowledgeable and experienced CPAs on hand. The other thing they do very, very well, and I know through, the people who have experienced that, is that if you or anyone in IRS tax audit situation, Science CPA Services, really looks into very, very, very professionally into that IRS tax audit matter, and they will do best to resolve the IRS tax audit for you. They have done it very successfully for their corporate as well as personal clients, but they need to review all the details, and they can advise you and guide you. And I know, AJ, I really want to give you a compliment for that, doing it, because you have made many of your clients very, very satisfied in resolving IRS tax audit.
Oh, thank you. I appreciate that.
Sure. And IRS tax audit is something that, whoever gets it, obviously they panic, they worry, and they get nervous, but don't get nervous. Immediately contact Science CPA Services and have them review it. With that note, in today's show, we're going to talk about IRS tax audit. What triggers IRS tax audit? What should you do? What should you not do? All the details, we're going to hear it from Mr. Ajay Kumar. So, AJ, the first question is, of course, IRS tax audit is always a burning issue, and a few people, when IRS randomly picks them up and they're audited, what triggers IRS audit?
Yeah, absolutely, Sanjeevji. And a timely discussion. We just finished the tax season a couple of weeks ago. A lot of people probably will be getting some IRS notices, some deficiency notices, some tax liability notices. So one thing we tell all our clients, all our viewers, that please, if you have a notice, if you have a letter from IRS, the last thing you want is to ignore it. Please do not ignore it. Whoever filed your taxes, if you file your taxes yourself, read through the notice carefully, call the number given on the notice, find the number on Google, on internet. A lot of time these notices are scam notices, and they have a phone number over there, and that number is also a scammer's number. So be careful which number you are calling and what website they're asking you to go, if they're asking you to pay immediately. So don't fall for any scam. If somebody is asking you to pay cash or these prepaid cards, that's sort of a sign of a scam. IRS calls do not push you, do not force you to pay right away. They do not ask for a prepaid card. They do not ask for cash. And then you can always verify with an accountant, with a CPA, or by going to local IRS office if the notice that you have is a legitimate notice or not. And this is the season. You see, it's a Thanksgiving, Christmas season. It's a festival season. It's the season of a scam too. So we want to bring to your attention what are the typical IRS agents, what are the typical triggers for these IRS audits? So we can start with not filing the taxes properly. And what we mean here is if you don't report all sorts of income, let's say if you have multiple W-2s, some 1099, some rental income, some interest income, and dividend income from the stocks, some crypto transaction, and you are not reporting everything. So a lot of this information get reported to IRS before it's reported to you. So all 1099 copies, all W-2 copies are sent out to IRS before it's sent out to you. So IRS already has a record of what you should be reporting. When you file your taxes, if it's not syncing up, if it's not matching with the information that IRS has, more than likely you will get a notice asking you to clarify why you did not include certain transactions.
Very good. Okay, absolutely. Now, one thing you mentioned about scams, yes, and scams going out, but another thing, viewers, that you should keep in mind is that IRS never ever calls a taxpayer. So if someone calls you and says that they're calling from IRS, it's definitely a scam.
You're 100% right. Unless you own a business, you have to have a business and a tax liability against the business. For individual taxpayers, IRS doesn't call.
Absolutely.
If you have a business and IRS is calling, stay polite, get their number, get their ID, and then ask them to email or fax or mail the information to you. Give them the fax number, give them your address, verify the address. Instead of you giving them the address, ask them to verify your address. So try to give limited information. If they are really IRS, they should have your address in file. They should have your name, address, social security number. A lot of times these IRS agents, the scammers, they will try to verify, give me the last 4 digits of your social. Where do you live? Just don't fall for it.
Yep. Okay, very well. Now let's continue our topic, IRS tax audit. High income levels, that's where they really need, they target those high income level people. So AJ, tell us, what should the high income level individuals do in the tax return to avoid the audit?
So statistically speaking, higher the income, higher the audit rate for the IRS.
Chances are high.
Chances are high, and if you look at the actual statistics, if you look at the actual audit rate, you will find the people in the higher income, people who are making more than $1 million, have up to 8% audit rate. People who are making more than $200,000, they have up to 4% audit rate. People have who are making less than $50,000, they typically have less than 0.5% audit rate. What we are saying is more income you have, more potential audit probability you have. So you have to be careful. You have to know, you have to make sure you're reporting everything. If you have foreign transaction, if you own a company here, your US company owns an Indian company, meaning if you have complexity in your situation, consider filing an extension, consider getting all the information, make sure you download a tax transcript, and more complex the situation you have, lesser the reason you have to do it yourself. Try to find a competent accountant who is familiar with your type of situation and let them file it for you.
Okay. All right. The next item that I know is the large charitable contributions.
Absolutely. So charitable contribution is a sacred thing. IRS allows up to 60% of cash charitable contribution and up to 50% of non-cash contribution. There are a lot of plans where you are allowed to donate certain rights. Let's say, for example, if you have a property and it's on the highway and the state doesn't want to construct this property, you can give up the right of construction. If you have a historical property, you can give up the right of construction on your historical property. In those cases, you qualify for non-cash donation, but those things are highly scrutinized. Take an example. In your income level, if every year you have been claiming 5,000, 6,000, 7,000 of donation, and suddenly your donation is 50,000, you better provide the receipts around it, especially if it's a non-cash donation. The worst part is a lot of people send these used clothes to Red Cross Society, and a lot of time they will just give you the receipt. They don't have the proper appraisal around it, and people are filling up those numbers themselves on the Lupus receipt, on Red Pro Society receipt. So just be careful what you're claiming, and if the number seems out of proportion based on your history, based on your prior tax return. In those cases, it's common for IRS to be asking for the proof. Remember, all donation, all such proof receipts must be contemporaneous in nature, meaning you cannot say, I know the Panditji, I know the temple. If the need
It
be,
doesn't work that way.
I can get the receipt. The receipt has to be there with you at the time of filing.
Yep.
Otherwise, you should not be claiming the expense.
All right. The other two areas where the taxpayers find it really, really good to take advantage of it. One is the business expense, and the other one is a home office deduction.
Absolutely. So people get carried away, especially when it comes to the home office expense or single member LLC, which goes on Schedule C. The best part is you don't have to have a business to claim business expense, meaning you can have intentions to open a business. You can be trying a new business without forming the proper LLC. Legally, you are allowed to put those expenses on Schedule C. C as in Charlie. But remember, Schedule C is the most audited schedule in IRS records. So when you are claiming any expense on Schedule C, you have to be careful. You are adding potential audit in your situation. Home office expense is extremely tricky. You have to see how much of the space you are using. Is it used exclusively and consistently, regularly? Meaning you can't really say, I have an office table in my bedroom, and that's why I want to claim the home office expense. That's not how it works. It has to be a separate area, separate window, no bed. And then you have to see how big of this space. Let's say your total house is 2,000 square feet. And this is space that you have, this separate office exclusively, is 10 by 10. Then 10 by 10 is 100 square feet. Then you can claim 5% of the other expenses for your office. The worst part, when you sell the home, the percentage of the home that you are claiming as a business expense, that part becomes a taxable transaction for you. Remember, when you sell the primary home, the first $500,000, married filing jointly, first $500,000 of gain is non-taxable. But if you have been using the home for business, in this example 5%, then 5% of the capital gain is going to be taxable. So you have to be careful what you claim and look at the repercussions of what you are claiming.
Okay, very well said. With that note, we're going to take a break, and viewers, when we come back after this messages, AJ is going to touch upon more IRS tax related issues which you don't want to miss it. So stay with us. We'll be right back. Hello and namaskar viewers, welcome back to the second half of the Tax Talk with AJ, and today's topic is really, really interesting. Today we're talking about IRS tax audit. Let's continue our conversation. IRS tax audit. Before the break, AJ touched upon some of the issues that what triggers IRS tax audit. We'll continue that conversation, and also AJ is going to tell us how to avoid IRS tax audit. Obviously, you cannot avoid IRS tax audit by not filing your tax return, right? That's not the way
absolutely
to avoid
not.
it.
Absolutely not. If you don't file it sooner or later, IRS will catch up to you. It's a matter of time only. So the IRS has 6 years to get back to you from the date of filing. But if you don't file, that 6 years is not starting. Meaning if you file 3 years late, they have 9 years. So unless the filing is done, the clock is not starting. But before we go back to our IRS audits, we want to let our viewers know that now the gold buying has no restriction. Prior to 1974, people were not allowed to buy any gold. The gold ownership was illegal between 1933 to 1974. Even now, if you are importing gold over $10,000, you are supposed to let the custom know.
Okay.
If you are buying gold over $10,000, we see it as a reportable transaction. The jewelers will report this transaction as a cash transaction. We still see gold as a form of cash. So if you are buying gold for more than $10,000, that transaction will automatically, without you knowing it, be reported to Treasury.
Well, without you knowing, in a sense, when you purchase that from jeweler takes all the information, and once they take information to add into system, it immediately goes to IRS.
But they just CTR around it. It's more like cashing a check of 10,000 or more, or paying somebody more than 10,000 in cash. There is a cash transaction report that they are supposed to file automatically. The system is supposed to file, and a lot of jewelers file this CTR if you are buying more than $10,000 of gold.
Wow.
But there is no limit on the amount of gold that you can own now.
There's no limit. Yes, true, AJ. Gold has become a very attractive commodity, and so is silver. Silver is also doing very, very well. So these are the two very interesting commodities. Anyway, let's come back to IRS tax audit. How to avoid IRS tax audit in the real sense?
So just be careful. Report everything. And you say, a lot of people ask us, what's the limit on donation? What's the limit on medical expenses? IRS is not comparing your file with your neighbor's file. IRS is comparing your file with your file. IRS has history on you for multiple years. So just be consistent. Don't go out of your way. Make sure you report all the income. More income you have, higher the chances are there for your audit. More income you have, more reasons you have to hire somebody to do the right thing. More complexity you have. Let's say if you have a lot of companies, lot of K1s, oil and gas investment, preservation, historical society type of investment. More complexity you have. Please find somebody who knows what they're doing. If you have foreign transaction, you have to have somebody who understands the foreign transaction. You need to file the FBAR, FATCA. There are huge penalties if you have gift given or gift taken. Make sure you're reporting it on separate forms. There's a separate form, 709, that you're supposed to file when you have gift given or gift taken. Please remember, gift filing belongs to giftor. Person who is giving the gift, not the person who is receiving the gift. But make sure you're keeping it clean, keeping it sane, and then keeping every number in the limits based on your situation.
Oh, wow. If somebody gets a $400 million jet, would they be paying a tax on it? It's a gift.
Well, again, the US system says the gift responsibility belongs to giftor, the person who's giving the gift, not the person who's receiving the gift. Okay. So in theory, I'm not advocating the transaction. I'm not saying this is the right thing to do. But in theory, if somebody is receiving a plane for $400 million, the person who received the gift has no gift filing obligation.
Even though it's a president of the country, and then after that they're going to use it for personal use, still no taxes?
Personal use or business use has nothing to do with it.
Nothing to do with it.
And at least in theory, being the president or not being the president has nothing to do with it. But I mean, again, who am I? I'm a small-time accountant. The way I see it, receiving the gift is not a taxable transaction.
That's your modesty to say that you're a small-time accountant. Folks, he's not a small-time accountant. He's a very, very busy professional CPA, manages Science CPA services with almost 100 employees here and in India, and does, tackles all the difficult, complex tax matters when it comes to corporate and a personal. Let's continue this. AJ, there are a couple of very hot, pointers that I really want you to shed some light on it. Quickly, we're going to move on to it. One of the things IRS, to avoid IRS tax audit is aggressive and undocumented documents, right? Do not even try to go in there, and don't try to, be smart and put those expenses.
Absolutely. So if you have an aggressive tax stand, make sure you have the proper documentation around it. You don't want to have a claim on your tax return that cannot be justified. More aggressive the claim is, let's say if you are claiming captive insurance, or if you are trying to amortize the fertility of the land. Land typically is not amortized. But the fertility of the land can be amortized if you have the proper report. If you can justify that I have a farmland, this farmland is fertile, but this fertility will go away in 5 years, and you have documentation around it, then you can claim an amortization against the fertility. If you have historical preservation property that you are trying to give up the right to construct, and now it's a non-cash donation to the township, make sure you have proper documentation. Somebody certified in their field is giving you this documentation that you are claiming on your tax return. More aggressive the tax stand you have, better documentation you need to justify it.
Okay, very well. Quickly, we're going to go on, like I said, touch upon some of the important issues. One of the main reasons to avoid IRS tax audit is they say, use a tax software or use a professional. But let me just tell you, you can use a tax software. No one says no to you. Obviously, you don't want to use an accountant. You can use a tax software. But tax software will always not tell you what are the legitimate deductions that you can get depending upon your income and a tax bracket and all the scenarios. And especially if you and a spouse are in a high earned income category, then strong suggestion is to use professional. It's just a fraction of a cost that you're going to be paying to the professional accountant, but at least they will review it, and at least you will be able to get the deduction that you are eligible for to save tax liability. Am I right, AJ?
100%. There are two different issues. So using a tax software is a very good idea instead of doing it manually. Instead of trying to use the pen and paper to do the taxes, using the software will help you do some calculation automatically. But at the same time, tax software, most of these softwares are question based. They will ask you a question, you give the answer. But they don't really know the consequences. Let's say if you have a business and then you have a home office, what expenses are claimed? You went for meal, is it claimable or non-claimable? You are deciding it. The software is not deciding it. Software is say, give me the meal expenses, and you are putting in a number. But that meal expense should not be claimed because that's your meal. You would have eaten anyway. So software is guiding you, and based on your information, based on the decision that you are making, software will try to calculate the taxes. So software is better than doing it manually. But if you are in high earner income bracket, please try to use professional help.
Absolutely. It's always a good idea to use professional tax account, especially, if you're in a high earned income category. That's always a good. And the other good thing is you must separate your business and the personal finances.
100%. You don't want to be commingling the funds. If you commingle the funds, then we don't know which expense is business expense and which expense is personal expense. Even if you don't qualify for a business credit card, a lot of times the new business owners do not qualify for a business credit card. So they end up using a personal credit card for their business expenses. Even then, keep one separate card for business expense only. Do not have the same credit card used for personal expenses and business expenses. We see that situation a lot of time with car. They have one car which is under their name. Just because part of the car or part of the travel is done for the business, they try to push the whole car's lease expenses into the business expense. Just try to avoid those type of situations.
Absolutely. And the last but not the least, when we have about a minute and a half to go into, AJ, let's talk about staying current on a crypto and the foreign asset rules. That's really important.
Absolutely, Sanjeevji. So cryptocurrency transactions are now reported to IRS. If you have any exposure to cryptocurrency, please make sure you're reporting it. It's not difficult. It's like any other stock. You have the capital gain, you pay the capital gain taxes. If you have capital losses, you claim the capital losses. But if you have cryptocurrency, the problem with cryptocurrency transaction is a lot of people feel that nobody will find out. And that's not true anymore. For last 2 years, IRS is getting the cryptocurrency transaction directly reported into the system like any other 1099. So please try to stay on the right side of the law. You don't want to be found that you knew about it and you did not do the right thing.
Absolutely. Thank you so very much, AJ. With that note, we come to an end of this week's episode, the Tax Talk with AJ. But in the end, a very important message I want to share it with you is that now we are, getting into month of November. By the time you watch the show, November will be here and November will be coming. But now we are in November. Let's assume. So we have November and December, 2 months to go into this year, 2025. Please look at your taxes right now. Look at your income, the possible income by the end of the year, and then your finances and everything else, because this is the time where you can invest money in one of those plans where you save on your tax liability, not the refund. Refund is something different, but the tax liability. So if you really invest money in one of those plans which are authorized by the government, approved by the government, you can reduce your tax liability. So do pay attention to that matter. Do not avoid it that you can only do it till end of December. But why wait till end of December? you must contact Sai CPA Services now, 908-888-8900, or visit their website, saicpaservices.com. They'll guide you, advise you, and also suggest you where you can invest the money. So it's a time right now to look into it, few minutes, few hours, a day or two. It will really, really help you to save your tax liability. AJ, anything to add to that?
Absolutely. If you are in New Jersey, November is here. We have the election week this time. Please go out. Make sure your vote counts. You owe it to yourself. This is your responsibility. This is your right to vote for the right candidate that you believe in. So with all that, please give us a call if there is any question, and we'll be happy to help.
Sure. A good reminder for vote. You must go out and vote. Until we meet again, same place, same time. I'm Sanjeev Pandya, wishing you all happy and the tax-free days ahead. AJ, once again, thank you so very much for your time.
My pleasure.
All right.
Thank you.
See you all. Take care. So long.